Hey, what's going on, guys? Welcome to another edition of Study Crypto. Today, we're going to go over the idea that crypto, with all its warts and issues and rug pulls, is still better than traditional finance in many, many ways. We're going to go over that idea, that concept. We're going to show you some examples of rug pulls that have happened in the traditional finance world, TriFi, centralized finance, that will make you think twice before you want to condemn all crypto as being full of nothing but scams. But first, before we get into it, please do us a big favor. Hit that like button and that subscribe button and ding that notification bell as well. We really do appreciate it. And as always, this is not financial advice. I'm not a financial advisor, and crypto investing is high risk. So do be careful, do your own research. Now, let us get into it. Now, the idea that crypto is still better than a lot of other asset classes in terms of potential price appreciation is very true. A lot of the other asset classes are already extremely mature, and you're not going to find the gains available in crypto anywhere else. However, as you guys know, there is volatility and there's a lot of risk involved with crypto that we always talk about. But this is not to say that there are riskless opportunities in traditional finance where people got rug pulled, finances destroyed, scams, and the like. And we're just going to go over a few of them just to give perspective. I think it's interesting and worth keeping in mind. Those of us that are in crypto, we're only typically focused on what's going on in crypto in terms of rug pulls and scams. However, in traditional finance with publicly owned companies and especially privately owned companies, things like rug pulls and scams are numerous. There are far more scams and rug pulls in traditional finance than there is in crypto, especially with privately owned companies. So I just want you to keep that in mind. Again, we're only in tune to the ones in crypto because we follow it, those of us that follow it regularly. We hear about them regularly, we hear about them often. If we were that in tune to private finance, we would have that same experience. But we're going to go over a couple of the big ones that happen in traditional finance. So first up, we can talk about Theranos with Elizabeth Holmes, big company. It was trusted on Wall Street. It had over $600 million rug pulled. Complete scam. She said she was creating products that she was unable to create. She said she could have a blood analysis project, blood analysis system. She said she had it up and working. Complete lies. Complete lies. And people invested billions of dollars into her. She became a billionaire in the process. And now she's in jail. Or she should be in jail. Or something. Like she was guilty, but for whatever reason, she may or may not be in jail. Point is, complete scam. Literally on the cover of Forbes magazine, Forbes, trusted publication. It's like a coin being on the front page of a Coin Market Cap or on CoinDesk or something like that. Coin Telegraph. She was on the cover of Forbes. Complete scam. 600 million gone. Next, we all know Bernie Madoff. This guy literally was on the board of the SEC, the regulatory agency for stocks. And his scam was $65 billion that he stole from people. $65 billion. Total Ponzi. Total Ponzi. Unbelievable. Went on for decades. And nobody found it out. He gave himself up. Gave himself up, wound up killing himself in jail. One of the biggest Ponzi's of all time. 65 billion, went on for decades. And they didn't even catch him. He gave himself up. He was on the board of the SEC. Think about that. These are the scams and rug pulls. Ponzi's. that are in traditional finance. Again, there's a lot of them in traditional finance. There's a lot in crypto. So don't get it twisted and think that crypto is worse than TriFi in that sense, and vice versa. No, there's scams in both. Next, Enron. Enron, big scandal, total fraud with the accounting lying on their books. They lost $74 billion in the 4 years leading up to its bankruptcy, and employees lost billions in pension benefits. Okay? $74 billion. $74 billion. Scam, gone. Accounting, fraud, in business for decades. Total rug pull, total scam, fraud. Traditional finance. Next, Bear Stearns. Bear Stearns' liquidity pool started $18.1 billion on March 10th, 2007, and then plummeted to $2 billion. Big scam. They lost money. They invested in the wrong things. While Bear Stearns had around $18 billion of cash on its balance sheet, it required around $75 billion in cash each day to run its business. Okay? They invested in the wrong things. They had too many expenses. They couldn't sustain. Everybody believed in them. They crashed. They burned. They hurt people. People lost money. Billions gone. Bear Stearns. Okay? Happens in traditional finance. Happens in DeFi too. Luna, right? Similar kind of thing. People believed, they invested, they lost money. People believed in Bear Stearns, they invested, they lost money. Gone. Okay? It's not just crypto. Lehman Brothers, with $639 billion in assets and $619 billion in debt, Lehman was the biggest bankruptcy filing in U.S. history. This company was around for 150 years, and they screwed up. They lost money. They're no longer in business. Investors lost money. Everybody was wrong. Smart people were wrong. The PhDs were wrong. Politicians were wrong. Investors were wrong. Gurus were wrong. And they lost over 600 billion in assets. That's insane. That's insane. Okay? So it's not just DeFi. It's not just crypto that has big scams, big rug pulls, big Ponzi's. It's traditional finance. It's everything. So don't get it twisted and think there's no faith in crypto ever again, that it's just the wild, wild west to the point where it's not worth it, because you know what? The same shenanigans in crypto are the same shenanigans you're going to get in traditional finance. The big difference is that in crypto, you still have opportunities if you make the right decisions to get insane gains. Those are pretty much gone out of traditional finance. Obviously, we're in a bear market. Things are crazy. Big gains are not going to be had anytime soon. But in the long run, there's still going to be more available in traditional finance. I'm sorry, there's still going to be more available in DeFi, decentralized finance, than traditional finance. All right. Private companies rug, scam, pull, rug all the time. Private companies do rugs all the time. Even publicly traded companies rug pull all the time. All right, guys, that's it for this video. Let me know what you think. Let me know what you think is more riskier: traditional finance, DeFi. Also, let me know which you think has better option for bigger gains: traditional finance or DeFi. All right, do us a favor, hit the subscribe button, hit the like button. Do us a big favor with that. All right, we really appreciate it. Let me know what you think. Talk to you next time. Hey guys, thanks so much again for viewing our wonderful video, and please don't forget to hit the like button and the subscribe button if you found value in this, and please ding the notification bell as well. Thanks so much. See you next time.